Here to share what he is watching is Fundstrat's head of research, Tom Lee. Welcome back. It's good to see you.
Great to see you,
especially
Scott.
on this day. How are you?
Yeah.
What do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, NVDA decline is the worst since March 2020. And we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity.
I've been thinking about, the people who've been coming on today of all sort of professions, whether it's a strategist or investor or whatever, analyst, defending all this or saying it's overblown. How do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if NVIDIA became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling NVIDIA here. And given, I think, the need for AI because of global labor shortage and NVIDIA chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do fire ready aim. I mean, I think it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought, or we decide that it wasn't worth the money that we were willing to pay for it?
I mean, these are fair questions. If NVIDIA was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think NVIDIA is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4.5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times.
Yeah, but I mean, because it's skewed, though, because of the mega caps, we're still like 22-ish times. So, earnings have to be really good from here on out, right? Don't tell me about multiple expansion again driving this train. You got to put up or shut up when it comes to earnings this period.
That's right. But, I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever.
What happens if, at bare minimum, we are questioning NASDAQ stocks for the foreseeable future? It just doesn't feel like, tomorrow everything's going to be great kind of deal. So as long as we're doing that, is there enough momentum behind some of these other areas of the market that this market as a whole can be okay?
Well, today, market breadth's actually pretty good.
Yeah, financials, healthcare, staples, they're green. Dow's up, almost 200.
That's right. Even in NASDAQ, we have stocks that are up.
Apple, Uber, Meta, yeah.
And I think that year to date, we have 3 weeks in, and year to date, Bitcoin's outperforming, small caps outperforming financials. So I think the market does look pretty healthy. I would say it's also very encouraging that if we can close on the S&P above 5881 by the end of this week, it really solidifies that 2025 is going to be probably a double-digit gain year.
What's your favorite part of the market right now, outside of tech?
I think financials, to me, represent a pretty good fundamental case of change this year because we have a new administration, a Fed that is dovish, yields that aren't painful for banks, and at a time when it could lead to upside for capital markets activity and multiples are low. So I think financials remain our number one S&P sector idea. I
mean, because I ask you because your narrative is so levered, so to speak, to big cap tech. Your top 5 ideas in the market are NVIDIA, Amazon, Meta, Google, and JP Morgan.
Yeah.
Now, you're not rethinking any of that?
No, at the moment, no. And even though this one day is painful, I do think markets tend to overreact. And again, unless we're on the cusp of a recession, this pullback in NVIDIA is going to prove to be a buying opportunity as well.
Any Fed risk this week at all? Can they? Do you have any worries about what they could say? They're not going to do anything, we don't think, but they always say a lot.
Yeah, there's a lot of uncertainty going into January FOMC because last month it really caused markets to rethink the probability of a hike. But the probability of a hike for 2025 now stands at 27%. I think that's an extraordinarily high probability. I think there's a chance the Fed sounds more dovish than market expects.
Tom, we'll talk to you soon. It's good to see you as always, especially here post 9. It's Tom Lee, Fundstrat.